All right, good afternoon, everybody. Got some earnings names hitting. So let's do this disclosure and get this party started. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading. Oh, my fucking... Oh, I cursed into YouTube. My mic wasn't on. I have to turn my mic on for the VTF. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. The only thing that's really changed outside of my sizing on these positions, which definitely has dramatically changed throughout the day, is that I was short the TQQQ last night and I'm long the TQQQ tonight. What a day. So I have a really hard cutoff today at 4:45. I'm sorry for that. Yeah, apologies in advance. I have a really hard cutoff at 4:45, so I don't know how many questions we'll be able to get into. After hours here, the market looks like it's upticking a little bit, and it's because we've got some decent-looking earnings reports that are coming out. Chipotle reported. Those numbers look good. The stock is up. ServiceNow reported.
IBM.
What?
IBM.
ServiceNow looks like it's trading up from where it closed today by a little bit. IBM reported. It's not really doing anything here after hours, but the numbers peripherally look like a beat. That free cash flow number from IBM is a really nice beat. Really nice beat. Splunk is out. Is that right? We have Splunk today. What's the symbol again? SPLK? No. SPLK?
Yeah, but Clack.
Oh, Clack.
NYC.
Clack.
Yeah.
I'm losing my mind. Is Splunk even a company anymore?
I don't think so.
Somebody bought them out, right? It's Clack with initial uptick. Now it looks like it's come back down a little bit. Ford trading down. Ford nasty trading down. All right, let's jump into the meat of the meeting. So the market got absolutely housed today. It got totally hammered. It got totally destroyed. We finally had a 2% plus movement in the S&P to the downside. So real down day for the S&P for probably the first time in a long time. Q's demolished, down 3.3%. That's with it. We're up over $1 here from where we closed. So down 3.4% with a dollar bounce. So it's actually much worse than that. And the IWM down 2% as well. So IWM spent most of the day trying to hold in. It wasn't until after 2 o'clock that the IWM really also started to capitulate and correlations increased, and they sold that back down as well. But yeah, a real pretty big down day across the board from the market. It's nasty. I don't think it's surprising. It's nasty. I just wish I did a better job taking advantage of it. I had some real computer issues today, which were beyond frustrating to have on a day like today, but it is what it is. So market here again absolutely smoked. The SPYs really got down to that $10 worth of extension plus today, which is impressive for the SPYs to do that because the SPYs have been so insulated on that move. Didn't really happen until close to the end of the day, but the SPY ADMA is at 552. We closed at 542. The low of the day is about 540. So almost $12 of extension intraday in the SPYs. It's brutal and bloody, especially when you consider that on the one hand we're $10 extended, on the other hand it's just a day one to the downside. Because you remember, going back to the Qs, which I can talk about the extension of the Qs in a second, the Qs had that first big down day here and really got to about $10 of extension, and then yet we're able to have 2 more down days before a little bounce actually came in. This actually was pretty textbook what we were looking for, the extreme extension. We were shorting into that, potentially flipping long, reshorting yesterday into the mid 480 area, seeing if we could get a down move. We absolutely got that down move. The degree of the down move, I'll be honest, I think everyone knows I've been saying it for a couple of weeks now. I'm bearish on the Qs. I'm bearish on Mag 7 coming into these earnings reports. with that, I was not expecting a move to this degree today. The degree of the down move today is really, really crazy. We closed here at over $15 of downside extension in the Qs, with it only being a day one, and that's with us being $2 off lows. So actually, we closed even worse, right? We closed $1 below this. So we closed $16 down from the 80 MA on the daily chart. Lows is like $17 down from the 80 MA on the daily chart. It's actually one of the most extended that I remember seeing just on a dollar basis, the Qs be to the downside since the 2022 bear market that we had, where, you know, I remember on the day that Russia invaded Ukraine, we had like even significantly more downside extension than this, though that was a phenomenal buying opportunity day that morning. This is an incredible downside move considering the news, or almost lack thereof, that caused it. So Google, which I think in some ways is actually the culprit of this move, is really only down 5%. You know, the Google Cloud number was pretty good. I just think that it's exactly what we were talking about coming into this earnings season. It's the CapEx. It's a capital expenditure that these companies are putting out on artificial intelligence, and whether or not the revenue is going to be able to come to play. So you get Google and you get Tesla kind of initially triggering the downside move this morning. And then we also talked about this in the morning meeting today. If you hit certain trigger levels on the downside, the market will become a feedback cycle of selling. It was literally written out in Pat's note this morning. We went through it in detail in the morning meeting. The data was all provided by Goldman before it even happened. We talked about this stuff again in detail. We talked about CTA and vol control universe positioning being potentially very bearish if we can actually break lower. That's what happens. The risk was to the downside, but we haven't been able to trigger any of those downside spots that would create the additional selling because gamma had been so high. And we know that gamma rolled off at the beginning of this week, end of last week, beginning of this week, because of options expiration. So it creates a window of opportunity where the market's going to be not as insulated from a gamma perspective from those down moves. And if within that window of opportunity for the market to give a bigger move, you get some sort of catalyst, which again, I don't see anything outside of, you know, maybe some concerns over the presidential election and uncertainty there, but these Google and Tesla numbers, and especially those capital expenditure numbers, I think on AI for Google, which is what we were talking about, kind of creating an initial catalyst to bring us down, that then caused us to hit some of these CTA trigger levels that caused the beginning of these outflows. In a down tape over the next week, $8 billion of selling, whereas in a flat tape, it's $170 million of selling, non-existent. Over the course of next 1 month, in a down tape, $67 billion of selling. That's just from the CTA universe. At the same time, you know, somewhere in here they talk about the vol control strategies. Well, guess what? The VIX picked up. I don't know where the VIX closed today. If anybody can give me a quote on that, I'd be interested to see it. Again, I just had a frustrating day from a technology perspective. But 18.3, well, there you go. The uptick in the VIX from 12 to 18, you're going to have some probably forced selling that comes into these systematic vol control programs that are out there. That just leads to more selling. And the trigger points, again, for those CTAs were ticked, right? See, SPX short-term threshold, 54.72, ticked it. Qs, pretty much there at the open, 19,608. So we just hit price points in the market as that gamma rolled off that created a feedback cycle where selling leads to more selling. There's less liquidity that's out there at the same time. This is a structural sell-off in the market. It's that simple. And because the VIX finally rose as much as it did, we actually saw correlations increase and maybe a little bit of a reversal of kind of the dispersion trade for the first time. Eventually, that IWM, which actually still looks healthy on the daily chart, that IWM, which was trying so hard to hold in, went green off the open, held in all day, even if it was in red territory, eventually couldn't hold in anymore here at 12:15 and played some catch up to the SPYs real quick. eventually sold off as well. I mean, this downtrend in the Qs today was just so nasty. But this is what you see. This is exactly, when you look at this 5-minute chart of the Qs, this is exactly what markets look like when there is systematic selling. This isn't panic selling, this is systematic selling. This is just every time there's an uptick in the market, you are running right into the offer on these strategies that are being forced to liquidate their positions, and it's just a steady stream of selling pretty much throughout the entirety of the day until the close, where you get a little bit more upside downside kind of volatility and movement into the close there. So just super nasty day. The question is, like, are we done? And it's very hard to say. I got some TQQQ long here overnight because we're, you know, $17 downside extended, which is extreme. But I'm nervous about that position, to be honest with you, because it's only a day one. You know, like I just said, you know, we were downside extended here on the 17th, yet we were able to have 2 more downside days. So probably tomorrow, if we are going to continue lower, we need to have some digestion in the beginning of the day. I do think if there's some universe where we have a big gap down tomorrow, that will be very short-term viable for the gap fill, for the snapback, for some extension satisfaction. But if we get like a flat to up open or up small open, it's going to be tricky. It's going to be tricky because it's still going to be difficult to buy. You know, remember this day? This is just back here on July 18th. We gapped up on our day 2, and then they sold that gap up down, right? So that we could be back to $10 worth of extension. If we get like a flat open, you can't short a flat open, but it was only a day 1 yesterday. Do you really want to come in and buy immediately after the day 1 without a little bit of a better setup? It's also really difficult. So we got to see how we gap tomorrow. Again, I do think a gap down tomorrow would just have us so extremely oversold. Short-term tactical will probably already be in the green, that you could probably take a sizable long trade to, you know, satisfy some of that extension from a gap down tomorrow. But if we open up, you know, flat or up small, it's going to be very difficult to do anything with that here. If you get a big enough of a gap up, you might be able to short it. But I'm just looking at where this ADMA is at, you know, 480. That'll be lower tomorrow. Maybe that'll be at 477, 478. You kind of need a bounce back to 473 to feel confident to reinitiate the short side of the trade. So, you know, I got out of it my QQQ short, and I'm still bearish on the Qs, by the way. It's just like we always talk about. You can be bearish, but at the same time understand your extension rules typically mean that markets don't go in straight lines. But though, by the way, if they ever do go in straight lines, that straight line is usually historically to the downside if panic selling comes in. We didn't even see panic selling. It's not a great headline.
It's a crazy headline as we're sitting here.
So that's kind of where we're at. You know, if we can get a real bounce back to 473-ish tomorrow, I'll definitely be 100% out of the QQQ long that I'm keeping, and I'll potentially be looking to get back short. But I don't want to rush back into the short, into overly extended territory after such a big move. But the bottom line that I'm trying to get across is, for this down move today, all of the evidence was there. All the data was there. It was staring us in the face. If you're not waking up early enough in the morning to read Pat's note, then you're hurting yourself on your ability to understand how and why this market's moving, to be prepared for moves like today. Because there was very real opportunity to make money off this move. I kind of think that shorting off the open was difficult because the gap was so big. Like, the best thing to do would have been to just have the stock from yesterday, which I know I did. I think some of you guys did as well. And the biggest thing for me was that I just, you know, covered that a little bit too early, because I was looking at, you know, the Qs approaching 470 and going, oh my God, we're already over $10 of extension. And this is where my game plan says that I want to get out of that short and then look to reinitiate that short into bounces. And obviously the bounce never came. Yeah, that's pretty much all I got. You know, some of my long swings today got absolutely and utterly smoked, but of course that's gonna happen. And it's why I was trying to have hedges on right now, whether it's that IWM into upside extension or the Qs just for the rotation trade to kind of counterbalance the fact that I know that some of my longer term positions that I've been trading around will very much smoke me if we get a real breakdown in the market and if the VIX moves higher, and that's exactly what happened today. So that is pretty much all I got. Again, I've got a tight cutoff today, so I can't stick around for too long. But that was a quicker meeting, so I do have some time to answer any questions, and I know that there was a lot that happened today, so I'm sure some of you guys have questions, and I am happy to do my best to answer them. Bank of America just announced a $25 billion buyback. It's interesting that they would do that close after their earnings report. And we could take a look at some of these charts here real quick just to see the extent of the damage. Apple lost that 222, 223 support level that we had discussed. That was a nasty break lower there. Google actually never got down to the 170, 171. I had a bid in very early at the open today at 171. So I thought that would be a buyable spot. That was the measured move. The measured move from the options move into the into the earnings print, and 170 is a big support level. And someone on the team mentioned that 169.44 is like a weekly trend line. So there's just a whole bunch of support clustered in there. It's actually really interesting to see how well Google itself actually held in during the day today off of its numbers when they just absolutely obliterated everything else, when in some ways Google is your main culprit for the sell-off. Tesla was disgusting, continued lower. The hardest part about Tesla was that they gapped it down too big. I wanted to be short versus 230, or even more ideally 235. Never gave you a chance to short versus those levels unless you did it after hours yesterday or maybe pre-market this morning. What else? Microsoft nasty break lower. I can't help but start to wonder as I see Meta here having now pulled back $80, Microsoft having pulled back $40, Amazon's actually not as bad, pulled back $20. At what point my thesis of Mag 7 weakness off of earnings is realized, potentially even before the reports actually occur. The more that we can sell down into those reports, the less likely it means that we'll sell off on mediocre reports, which was my thesis to begin with. So, yeah, what else? What else, guys? Anything else? Was anything strong today? Was anything green today? XLE was not. Financials were not. Was there any green sectors today? Consumer staples? Consumer staples are green? Yeah, small green from consumer staples. Industrials were red. Utilities, yeah, utilities, not surprising. So our defensive sectors, were able to be green. From Tate, would you go for software or the semis tomorrow for a QQQ bounce? I probably would go for the Qs themselves, to be honest. But I think that software, it depends what names, and software is such a big universe, it depends which names you're focused on. I still like the idea of the IWM and small caps and mid caps holding in better than the Qs, but the Qs have just become so extremely downside extended that needs to heal at some point. I wish we were trading down at these levels with today actually being a day 2, not a day 1. If today was a day 2 and then tomorrow morning is a day 3, I would have a lot more confidence to look for the long tomorrow. But even with that, I think a big enough of a gap down tomorrow, if you can get us down to 460 pre-market or early in the open, I think that's going to be a very viable level. It's a big daily chart level, and we would be just monstrously extended into that spot. Yeah, ENPH was up on earnings. Had a pretty good day. It was just tough because it was within a range on the daily chart. And then yeah, your safety names. Are you asking about this AOXN, or are you telling me that it was green? It doesn't look like it was green. Vikas. Inside day and down is in a day 2. You mean if there's an inside day tomorrow and then the day after tomorrow is it down? Is inside and down? An inside day tomorrow, I think in some ways would be the perfect situation for bears. Create the inside day tomorrow just because the degree of extension is ridiculous, and then break it down further the day after tomorrow. Today's Wednesday, and that would be in conjunction with the PCE. We have GDP tomorrow, right? And then PCE on Friday. So that would be in conjunction with the PCE. If more companies talk about how AI is not helping, this would cause semis to drop further. This gets the Qs to the 100-day on the daily through price and time. What do you think about this perspective? That's been my perspective. That's been my perspective coming into this earnings season. We're starting to realize it. I think that this earnings season, and that was, I think, in some degrees what started this trigger of selling. This earnings season, the hype on the AI is starting to wear a little bit, and the amount of spending that's going on with it, investors want to see where's the revenue, how long's the revenue coming in, and where and when. And if they're not seeing that, that's what creates the bigger weakness in the Qs. Qs are still $40 away from their 200-day. It's not impossible to see the 200-day, especially if this selling continues. I mean, just look at the CTA numbers again. There's a lot to unwind in this market if we actually break down, if the VIX stays elevated. Again, with that said, I am a little bit surprised at the degree of the selling in one day today when Google itself actually held in as well as it did. Over in the YouTube, what do you think it's reasonable? What a day. Do you think it's reasonable to start looking long for the Qs? Yeah, I kind of mentioned that one already. I think it is reasonable. My concern is just that today was a day one, but we're very extremely oversold. Tate letting me know that the Qs are 8% off high, so we're pretty close already to a market correction. It doesn't feel like it, right? But the Qs are pretty close already to a market correction. Tate, do you know what the percentage is in the SPYs, out of curiosity? I know it's probably not even 5% yet, or maybe it's getting close to that. IWM closed on lows and retraced to the ADMA. Yeah, you want to see, I think, at this point, the IWM wedge out. So you want to see the Russell just hold up in this, which, again, it did for most of the day, and then eventually lost it today. Thank you, Vixie Bull. Yeah, ExxonMobil managed to be green today. That's impressive because the XLE didn't really participate. How much attention do I pay to index futures during the day from AR? Not that much, because I've got the SPYs and the Qs up, so the chart's the same. So I don't really need to be watching the index futures. The only point for me intraday of watching the index futures is I just want to know what prices they're at for the CTA price triggers that we discussed. That's it. So, I'm just checking on those prices every once in a while to see what's triggered. Otherwise, I'm looking at the SPYs and the Qs. But I should mention, I don't know if this is direction your question, it's extremely important to watch the market, however you want to look at it, whether it's a futures product or the S&P itself or the SPY. It's extremely important to be watching the market intraday as you're trading. I'm watching it 24 hours. Well, maybe not 24 hours because 24 hours of the market being open. I'm watching it all day when the market's open. I never take my eyes off the indexes when the market's actually open. Where do I see NVIDIA support? So NVIDIA lost major support today. We were looking at this 117-ish area. Whereas next major support, I guess it's more of a range, 117 to 115. So we're still actually in that 117 to 115 range. There's a pivot low back here on May 31st, which is 107. I think the first major support level is actually down to 96, which is a gap fill down there. Connor's RSI long triggers below 30 RSI in the indexes. Where are we? Looking on your link, but it's a little slow to load. Just have to I'm not going to watch all of that right now, but we're at 37. Oh, so we're not even, wow, yeah, we're not even fully there yet. Isn't CMG just trading right back to where it closed?
I think he means that it traded up to 60.
Oh, I typed up the wrong name. I typed up SMG. Yeah, it's already pulled back to the after hours ADMA, so I think that the pullback already happened there. Quick $4 pullback.
They beat on same store sales, which was a really big, which is the key metric for them.
What has been my go-to metal song this year? Question from YouTube is, what has been my go-to metal song this year? Like I got tickets to see Slipknot at Madison Square Garden on August 12th, so I've been listening to a bunch of Slipknot recently, and I just found this band the other night that I like, which is called The Plot in You. Never heard of them before. They have a couple cool songs that I've been listening to on repeat. From Sebastian, what do I think of buying VFC on the inside day? Someone asked about VFC this morning. Oh, you mean if you bought it today? Yeah, someone asked about this morning. I said I like the chart, but it's still a little bit extended. It looks like it tried to go today, but then the market caused it to fail. So I don't hate it, but it was a little bit extended, and the market's such an important layer of probability that it was pretty much impossible to be long anything today and expect to make money from it. Qs still seem to be grinding back up a little bit here after hours. But, again, I apologize, because I know it was a big day today, but I have a dinner that I have to go to, so I can't really stick around too long. So if we can just do the quicker one for today, that'd be great. And then we can reassess everything in the morning. So. All right, guys. Have a great night. I'll see you all tomorrow. There's a lot more information that we need to digest here after this move, and we'll reassess everything then. Have a great night.